What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the Wallstreetbets forum from the past week, so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members, who get access to these non-time sensitive videos one day in advance. They also get to vote on some of our video topics. First off, we have user Sith1292, whose Palantir YOLO isn't going exactly as planned. He bought 140 strike calls expiring on May 21st of 2021. All in, his cost basis was about $16,000. At its peak in January, Palantir reached within striking distance of $40. In the preceding months, the stock pulled back significantly and now sits at a little over $22. This puts his $40 strike price more than 70% out of the money. Despite the recent poor performance of Palantir stock, it still remains a favorite within the Wallstreetbets community. According to Swaggy Stocks, Palantir is the third most mentioned stock on the forum as of April 21st. Wallstreetbets users are largely bullish on the company, with the majority of the mentions having positive sentiment. In fact, Palantir is ahead of GameStop, which has fallen to 4th place. It appears like the Wallstreetbets community may finally be moving on from GameStop in search of other plays. Next up, we have user Top Illustrator 7845, who is down massively on his Viacom position. On April 7th, he opened a position of Viacom $60 strike calls expiring on May 21st. His total cost basis for the position was about $15,000. You might remember in late March, Archegos Capital, a hedge fund run by billionaire Bill Huang, blew up and its brokers were forced to liquidate billions of dollars worth of Viacom stock that they owned. This caused the stock price to tumble more than 50% in just a few days. The OP thought that this market dislocation presented a perfect buying opportunity, and Viacom would surely rebound once Archegos' position was completely liquidated. To play this rebound, he bought $60 strike calls. Before the sell-off, Viacom stock peaked at around $100. If it could reclaim those highs, his calls would be $40 in the money and he would print massive tendies. However, instead of rebounding, Viacom shares continued to grind lower in the weeks after he bought them, and the shares now trade for $41.85. This makes his calls far out of the money. The gradual decline in the underlying share price as well as the theta decay caused his calls to lose almost all of their value. To date, he has lost 91% on the position, which equates to more than $14,000. From the beginning of the year to its peak, Viacom increased 170%. This move was not based on fundamentals. Bill Huang was building up a massive position in the stock, which probably pushed the price higher. He was likely doing this in an attempt to induce a short squeeze. After Archegos liquidated his position, the stock fell back down to its original level of about $40. It didn't rebound back to $100 because the fundamentals of the business just never justified that valuation to begin with. While it's often tempting to buy the dip after a stock crashes, it's important to understand what was driving its price in the first place so you can determine if it's actually likely to rebound. Otherwise, you can end up bag holding. We wish you luck on your future trades. Next off, we have user RPMD11, who is holding some major losses on View. He owns 10,000 shares of the company, as well as a wide range of leaps with strike prices ranging from $10 to $20. View Inc. makes smart glass that automatically tints based on how much natural light there is. This bypasses the need for window blinds, increases buildings' energy efficiency, and increases the mental health of buildings' occupants. View went public via a SPAC at the end of 2020. Initially, it did quite well, increasing 30% to almost $13 a share as the SPAC bubble inflated. But as the SPAC bubble burst, View was especially a hard hit, with the share price tanking almost 50%. It now sits at less than $7 a share, or 30% below the initial SPAC price of $10. This is also below the OP's lowest strike price of $10. In all, the OP lost a grand total of $59,000 on his View positions. Despite his recent losses on the stock, the OP still thinks View is a good long-term play. He thinks their smart glass product will be used in more and more buildings in the future, especially in regions that have strong sunlight and hot temperatures during the day. Luckily, his options are long dated, with expiry dates ranging from July 2021 all the way to January of 2023. If the company can deliver on its growth outlook over the next couple of years, there's still a chance that he ends up in the green. Next, we have user Chicago1313 with a massive gain courtesy of Papa Elon. He's holding 40 call contracts expiring on April 23rd with a $715 strike price. So far, he has made $62,000 of profit on them for a capital return of 122%. He claims to have made these gains in the span of only 3 hours. That is actually possible because earlier in the day, Tesla stock did rise 4.3% in the span of 3 hours from market open till midday. With a strike price of $715, those calls would have gone from out of the money by $15 to in the money by $15. Whenever an option crosses from being out of the money to in the money, the gains are the greatest in that range. But if the OP had held till the end of the day, the calls would be about $30 in the money, almost certainly increasing his gains even further. One commenter asks how to know to cut your losses. The OP says that he only buys and never sells. Perhaps he's encouraged by this YOLO that worked out well for him after buying calls. User VMI 2011 says to take the money and run. With a stock as volatile as Tesla, no matter how much you believe in the stock, because the calls expire in only 2 days, it is probably a good idea to lock in gains. Especially when the OP is up so much. Even if he ends up leaving money on the table, a $61,790 gain will always count as a win. Next we have someone who has been holding Tesla for an extremely long time. User alternate22 posted this Robinhood screenshot with the caption, "Am I doing it right? BlackBerry is the next Tesla." He currently owns 23 shares of Tesla, worth $17,000. He's made $15,884 off his initial investment of about $1,100. But something is very unusual here. For $1,100, he was able to buy 23 shares of Tesla, meaning his average cost per share was only $48.64. Taking a look at Tesla's stock chart, that means that he must have been holding his earliest shares at least in September of 2019, back before the pandemic hit. After holding for a year and a half, he has been rewarded with an epic 15-bagger gain. Despite the massively impressive Tesla gains, the caption referencing BlackBerry is confusing. User Delicious Law thinks that it is just a backdoor brag about how much money this play made, or about how much diamond hands he has to have held for this long. You have to respect the gains. Congratulations on your trade. Next we have an obligatory deep effing value tribute, courtesy of user YH2313. He or she posted this screenshot of an exercise of 10 contracts of 14 strike calls on GameStop, on the same expiry as deep effing value himself also had calls. This is referencing last Friday when Keith Gill posted his final GameStop update, showing that he had allowed his GameStop calls to exercise rather than sell them, and thus added 50,000 additional shares of GameStop to his already massive position. This Robinhood user had much fewer calls, only 10 contracts compared to Keith Gill's 500 contracts, but is still enough to have made a massive 6-figure gain, less the cost to buy those calls. But given the fact that the strike price was $14, chances are that they were bought when GameStop had not yet mooned. Keith Gill, in the day that he let his calls exercise, has been etched into the walls of history in WallStreetBets. Some say that Deep Effing Value Day should be made into a national holiday in observance of the legend. He has built up such a massive image that some people say that they would blindly follow his GameStop investment if they knew that he was still in it. Always make sure to consult with a professional before making any investment decision. Next we have a YOLOer who has made a month of gains on SPY and Berkshire Hathaway YOLOs. His portfolio has gone from about $28,000 to $56,000 in the span of the past month, for a 100% doubling of his portfolio. He gave his recent trades, which showed short-term trading of Berkshire Class B calls, SPY calls, and also a small amount of Dogecoin. Most recently, he appears to have sold a lot of his calls and bought a small amount of Berkshire stock. This is a classic formula. Once you have made money on calls, possibly earlier than you expected, rolling those gains into stock can help de-risk the position without exiting completely. Congratulations on your gains. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, make sure to check out our second channel, WSM Research, where we post DD on high growth tech stocks. As always, thank you so much for watching. Wall Street Millennial, signing out.